OK, well, let's see now how our next guest reads the data that we've just had out of the British economy. Joining me now is Neil Mackinnon, Chief Economist at VTB Capital. Good morning. Thanks very much for having a look at these figures for us this morning. It's a little bit better than expected, but inflation's still high.
It's still high, and certainly the markets were discounting a reduction to 3.5%. So, as you say, a little bit better than expected. But I think there are very good reasons to think that the peak in the UK inflation cycle has been reached, which is not a surprise, really. I mean, a lot of the increase has been attributable to government measures like increases in fuel duty, VAT, all of this. And I think the underlying picture for the economy is still one of very sluggish growth, and that was highlighted in the growth forecast that the new Office for Budget Responsibility published yesterday. So against that background of sluggish growth, it would be a mystery as to why inflation in the UK should remain elevated for any period of time.
You say that, and this may be very simplistic, but if we see a VAT hike on the 22nd of June, which is being widely predicted, is that not going to be another inflationary concern?
Well, it will do, because it will feed directly into the consumer price in numbers. So we've got to wait and see just exactly what the impact of VAT is. But I think it's worth remembering that there's still quite heavy discounting going on in the high street, and I think that as a result, inflation pressures will be fairly muted. And I think if we are only going to see around 1.5% growth in the overall economy this year, which is now the official expectation, together with all the tax hikes, but mainly spending reductions, spending cuts that Mr Osborne is expected to feature in next week's budget, then all of that will act as a drag on growth, and that will sort of exert this sort of downward pressure on inflation. So
the Monetary Policy Committee is not going to come under pressure, you feel, to act on rates at this stage?
Well, I was slightly surprised by the comments made by Andrew's sentence about the possibility of interest rate hikes during the second half of this year. I hope that they don't do that, because I think there's a real danger that by tightening up fiscal policy, which is happening not just in the UK but generally, it's a big shift from what was happening last year, where central banks were talking about smooth, orderly exit policies for monetary policy, and where fiscal policy should remain accommodative. That's all turning round now, and fiscal policy is being tightened. That will act as a drag on economic growth. So I think they need to tread carefully here, otherwise investors will be worried about a double-dip recession.
And what are your concerns about double-dip?
Well, I think there are concerns about double-dip. Some people might say, well, we've not even got out of the first recession in the UK economy. But it's more relevant, I think, for the US economy, and there are some tentative indications that growth might be certainly easing back from a 3% rate to something like 2% for the third quarter, certainly in the absence of any fresh fiscal measures. And of course, people are keeping their eyes on what's happening in China as well. So I think there are real worries about double dips, which is why I think, particularly in the Eurozone, they should not overdo budget tightening.
Neil Mackinnon, thank you very much indeed.